Good afternoon and welcome to your weekly FX options report. Today is Wednesday, January 5th, 2011. As the new year gets underway and global markets return from the holiday trading volume, conditions have returned to normal. Now, U.S. equities did begin the year of 2011 with a rally, and there was profit taking in the session after that. But in midweek trade, we're seeing that the major stock averages are posting a modest advance. In focus are economic data releases, including the ADP employment report. On Friday, January 7th, the U.S. jobs report for the month of December will be released. And ahead of the jobs report on Friday, the ADP reported that the private sector here in the U.S. added 297,000 jobs. Now, that is a record reading, and that also did help overall sentiment. Now, most of the gains came from the service sector. And speaking of that sector, the ISM Services Index for the latest month came in much better than expected, rising to 57.1% from the 55 posted in November. That is the highest reading seen since May of 2006. And in terms of overseas economic data releases, Eurozone service sector PMI strengthened to 54.2 in the prior month. Other data releases from the Eurozone included PPI, which came in at 4.5% on an annual basis. And October industrial orders were higher by 1.4% month over month. And taking a closer look at the spot FX market, the US dollar is trading higher in midweek trade against the majors of the euro, pound, and the yen. The dollar is extending its advance against the Japanese currency higher by over 1.5%. Meanwhile, euro dollar has broken below the 1.3250 level and is lower by over 1% on the session. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, which is our daily trend opinion for our major FX option pairs, let's start out by looking at the AUX. That is the U.S. currency against the Australian dollar. Now, for that pair, it is under pressure, and the RSI has struck against its neutrality area at the 50% level and is currently reversing to the downside. Therefore, the preference of trading central analysts for the AUX is short positions below 102, with targets coming in at 95.60 and 93.50 in extension. For the BPX, the U.S. currency against the British pound, a rebound is expected. That pair is currently challenging its resistance, and the RSI is mixed to bearish. For that pair, the preference of trading central analysts is long positions above 62.50, with targets coming in at 65.50 and 67.50 in extension. For the CDD, a rebound is expected. That pair is currently rebounding on its support, and the RSI lacks downward momentum. Therefore, the preference of trading central analysts for the CDD is long positions above 98.50, with targets coming in at 102.85 and 105 in extension. Moving on to the EUI, that is the U.S. currency against the euro, a rebound is expected. That pair's RSI is currently turning higher, and therefore the preference of trading central analysts for the EUI is long positions above the pivot, which currently stands at 74, with targets coming in at 77.50 and 79 as targets. For the SFC, the U.S. currency against the Swiss franc, that pair is under pressure. It is pulling back on its new resistance ahead of expected weakness. Therefore, the preference of trading central analysts for the SFC is short positions below the pivot of 97, with targets coming in at 92.30 and 90 in extension. Last but not least, for this segment, let's take a look at the YUK, the US dollar against the Japanese yen. Now, that pair is currently under pressure and also challenging its support. Therefore, the preference of trading central analysts for the YUK is short positions below the pivot of 84.70, with targets coming in at 80.40 and 79.30 in extension. And now, moving on to our weekly trend opinion, let's take a look at dollar action last week. Now, we saw that the greenback lost some ground against the majors in holiday-thin trading conditions for the last week of 2010. Now, there were some irrelevant chart patterns that became apparent. This was due to volatile movement amidst weak trading volume. In terms of portfolio performance since its inception, which was in August of 2007, it is higher by 1,856.72%. Now, we do have two trade alerts for you right now, and one of them include the puts on the AUX as well as calls on the CDD. Starting out with a look at the puts on the AUX, that pair has broken below its previous low and is expected to face further weakness. Regarding calls on the CDD, earlier this week on Tuesday, January 4th, Trading Central recommended calls on the CDD. Now, the reason for this is that the pair has been posting a rebound on its support And the daily RSI also lacks downward momentum. Trading Central analysts will also be keeping a close eye on the following pairs, including the EUI, the BPX, and the YUK. Now, looking ahead to next week, we will be keeping a close eye on patterns for the exotic currencies, including the SKA, the PZO, the NZD, and the SFC. For the SKA, it is currently under pressure, and it is also challenging its intermediary support. For the PZO, it does remain on the downside and is approaching its strong support level at 121.50. The daily RSI for the PZO is capped by a declining trend line. And for the NZD, it has struck against its resistance at 136.15 and is also approaching its previous low at 125.65. Last but not least, the SFC is also being watched next week because it has broken below its support and posting a pullback on its new resistance, which comes in at the 97 level. It is also expected to see further weakness. And that does wrap it up for your weekly FX Options report. Make sure to tune in next Wednesday for your latest in FX Options news. Thanks for watching and have a great week.